G'day guys, Josh from JT Home Loans, here to bring you another acronym, CCR, or Comprehensive Credit Reporting for those not in the industry. What Comprehensive Credit Reporting does is it allows lenders to get a more comprehensive view of who you are as a client and what kind of risks or lack of risks you present to them when lending money. So something that's super critical to understand is that CCR is not necessarily bad. In the past, it used to be if you've got defaults or you've been delinquent in payments and you've gone overdue and in arrears, lenders had basically put a line through you, especially the big four and bigger lenders, and then you had to go to those specialised lenders that are going to charge you for the privilege of lending money a lot more than the others. So what happens nowadays is that if you've had a couple overdue payments, but on sundry and balance you look like quite a strong prospect, a lot of lenders are willing to overlook that. You can find that you can get approved with those big four banks now with a paid default. If you had maybe $100 phone bill that you didn't pay when you were 18 and now you're 24 looking for that first house, all of a sudden the world of lending is open to you, whereas before it might not have been. The thing to be aware of with comprehensive credit reporting is it provides a lender with an overview of the last 2 years of any open or closed facilities, whether it be a credit card, a home loan, a car lease, commercial finance applications, anything like that, it's visible. So from right now, we're shooting this May 2020, anything back to May 2018 is visible on that report, open or closed. You can't just close them now and hide them. That's not how it works anymore. But what this does is, again, if you're a clean skin, you've got awesome repayment history, what it does is it allows the lender to see that you're a super low risk. So you might have a high loan to value ratio, so you might be borrowing at 90% with an income that's barely servicing the debt, but your credit score looks really solid. All of a sudden that bank's probably more inclined to want to give you that money versus somebody that earns really high income, has got great deposit level, but yeah, they're a bit shaky in terms of how often they pay on time under their obligations of their credit contract. So the lenders, again, will factor those things in. Overall, on balance, the intent behind CCR is a positive one. It's supposed to allow people the opportunity to appear better and give a more holistic view of who you are as a finance client. So super important we stay on top of things, but just because you've missed 1 or 2 payments isn't the end of the world. There's a benchmark for most lenders in terms of what they want your scoring to be. And if you're uncertain of that, come to us. We can absolutely order a report for you and we can work through how you occur to a lender and find the right lender based on those needs. Thanks so much for watching the videos. If you can please click like, share, post any comments below, any queries you have about the content, anything else you'd like to know, just feel free to reach out. We're here for you anytime.